Welcome to the Tax Show. Are you running a business that operates in multiple states? Did you know that you might be overpaying massively on taxes, especially if you're located in a high tax state like New York or California? On this episode, we're going to talk exactly how Anil from 212 Tax helped one business actually reduce their tax bill by 7%, which is a huge amount. We're going to talk about the one tool that they use that blows away SEP IRAs to massively reduce tax burden for those big business owners. And we're talking about the simple monthly review system that will help not just save you a ton of money in taxes, but actually help you grow your business faster. All this on the Taxless Show. Let's get started. You want to know one way to save thousands of dollars, put just extra thousands of dollars in your pocket? It's super simple. Every week, we're going to send you a tip from the Taxless Show when you sign up for our newsletter. Go to taxless.show, or if you're on YouTube, just look below for a link to sign up for the newsletter. We're going to send you a tax tip every week. That's simple, easy to do, alternative investment advice, possible Q&As with tax experts. Plus, every month, we're going to give away a super cool I Hate Taxes t-shirt. Some version of that. But join us on the Taxless newsletter to make sure you don't miss a single Taxless episode. Tell us a little bit about your background.
Sure. So I've been in the tax business almost 17 years now. We're a boutique tax firm with, like you said, offices in New York City and Miami. But we service clients really all around the world. Anyone with a U.S. filing requirement, no matter where they live and or work out of, we can help.
Yeah.
So yeah, individuals, small businesses, corporations, partnerships, a lot of people with cleanup jobs, like haven't filed in a few years and or haven't paid in a few years. Like I kind of refer like Planet Fitness, no judgment zone. People sometimes like are like embarrassed to talk
Yeah.
about their thing, or like they just have a hard time getting all the information out. Really, that's it. Is get the information out of them. Learn what we need, what the issue is, and then we're happy to solve it. As soon as we can. As soon as possible.
Yeah, that's the whole point of like having this show too, is like so people realize that it's confusing. People get behind, they get confused. It happens a lot. It happens to more
Yeah.
people than
Way more people than anyone thinks. Yeah.
yeah.
I would say if you're in like a room of like 100 people, there's probably at least 10 or 20 people that aren't up to date on something with taxes. And a lot of people are like, wow, how are they not in jail, or how? I'm like, well, yeah, you can go to jail, but really, like, usually you get a notice or a lien or a levy or some other issue. But whatever it is, again, we're happy to help them. And yeah, people just all different reasons, right?
Yeah,
Life happens. So.
life happens, and the IRS isn't as scary as people think, unless you're doing something really really bad, right?
Exactly. Unless you're really ignoring them is the worst thing you could do. Or if it gets something to like a seven-figure type situation,
Yeah,
then maybe that word prison might come into play. But
yeah,
if you don't ignore them and you communicate and you have the right representation, you'll probably be okay in the long run.
yeah. You don't want to Wesley Snipes it.
I don't like to say names, but that's definitely one of them. Yes.
I mean that one's all over the
Yeah.
news.
No. No. Yeah. Of course. Even I just yeah, but that's definitely one of them. The situation. There was a lot of people in urban music and like musicians or rappers have had issues, but of course actors and
Yeah.
athletes. Shakira, I'll say her name because I'm a big fan. I'm actually going to her concert soon.
Oh,
She has
nice.
some issues. I think she's
I
all
didn't
caught
know
up
that.
now. Yeah.
Oh yeah.
So.
It's just crazy, right? Because it's like they have all these people, all this money, all these advisors, and you would think, and so you realize how easy it is for the common, especially business owners. I think that's because business owners get into a lot of problems with taxes, don't they?
Well, if you're a business owner, you're self-employed, right? So you're
Yeah.
not, even if you have a W-2 on an S corp or something like that, you're not having withholdings on all your income, right? So that's whether you're a business owner or just a freelancer or you have these side gigs. By not having withholdings, you're not as disciplined because every time you earn this money, make this money, it goes into your account. The money's not going directly to the federal, state, local governments
Yeah.
like it is on a W-2, right? So that's why business owners tend to fall behind more than maybe your average W-2 person.
Yeah. And also, like, yeah, cash flow issues happen, and they got to pay
Oh, yeah, of
employees,
course.
and
Payroll, sales
payroll.
tax, operating expenses. It's that's why I said sometimes it's just as simple as having a separate account.
Yeah.
Literally put money, whether it's sales tax, payroll tax, or income tax, like we're talking about. Just have as many bank accounts as you need. If that's what you need to do it, set up the accounts. You pay a little monthly fee. Who cares? It's going to be a lot less than paying penalties and interest. But you got to put the money aside in as much in advance as possible
Yeah.
in order to really not fall behind. I was having dinner with that client we just talked about the other day in New York a couple nights ago, and he's a young guy doing very well for himself. Already like okay, we caught him up in 23 and 24, but and like we're planning ahead, but like wait, you haven't made quarterly payments for 25 yet, even though you haven't gotten a bill yet, but so he's already behind on 25 too. So like things you got to make sure you make those quarterly payments. Even if you can't make all what you think you make something.
Yeah.
So you don't again because it's just a domino effect.
It's crazy, but also you can easily overpay on taxes, right? I mean, especially when you're like around the country doing other stuff, and you live in New York and you have a business in New York. You were telling me, tell us about this business that you helped really
Right.
stream.
My clients they're in the music industry.
Okay.
And they basically like book musical talent not only around the country, even like Canada, Mexico. I think they're internationally, and so they found me online many years ago. We did a few consultations. They were comfortable with one of the partners was comfortable with his family accountant back in New York, so he didn't really want to switch, and he just wanted to use me as like a consultant. I said sure, no problem.
Yeah.
So I could, and then I remember it was like March of like 2020 or 20. It was like during COVID. It was right for the deadline. He calls me up and said, Neil, I gotta switch to you now because my accountant is just like he's not even sure how we're set up, and he doesn't even know what our deadline is, and like, I'm like it's 5 days for the deadline, but you know what? I'll squeeze you in because I like working with you, and I know you're a growing business. So anyway, we brought them on as a client. Well, what we realized soon after we brought them on was that, especially because the two partners are headquartered in New York and California,
Uh-huh.
New York City and California, which is like the two highest jurisdictions, because they're booking their talent and doing business in many other states, we can actually allocate some of their income to other states and reduce their overall tax burden because they're a multi-state business.
Yeah, and I think there's a big point too. Is like everyone thinks every accountant is the same, and then they start to realize that all accountants aren't the same, right?
No, look, all accountants aren't the same. I'll always be the first one to say I'm not going to talk smack about any other
Yeah.
accountant, even when something's put in front of me and I see something's done wrong or sloppy. Look, everyone makes mistakes. It happens, But yeah, if you are a self-employed / business owner with a multi-state business, you want to go with someone who knows. I'm not the only one who knows it, but not all accountants know it, right?
Yeah.
You want to go to an accounting firm that knows how to deal with multi-state business, for many reasons. Not only to, of course, possibly reduce your tax burden, but also knows how to prepare and file those state returns. Because each state return looks totally different rules.
Yeah.
Like for example, Section 179 depreciates something federally. Not to get too technical, but that's basically like writing off a piece of equipment, like these cameras here.
Yeah.
You can write that off maybe on your federal return, but not so much on your New York return. So if you don't know how to do that properly, then you're gonna have a problem in New York potentially.
And New York is.
New York and California are definitely the two biggest beasts for sure.
Yeah, yeah, I know. I mean, I dealt with that myself, and it's like, man, New York. And when you have a problem in New York, it is not easy to get a hold of anyone to fix the problem.
No, it's getting a hold of anyone in the agency is not the easiest, but I will say, New York is easier than the IRS on average.
Oh, really?
Yeah, New York's easier than the IRS because they that's just how they're set up. Maybe with less people they're administering, of course, even though it's a lot of people. It's not. Maybe it's like what 20 million instead of 400 million or
Yeah.
whatever. But so New York, the communication with New York is not the greatest, but not as bad as the IRS.
Gotcha.
Actually, I'd say, of course, I've done more New York than California, but I would say New York's probably a little better than California too with communication. New York State,
Really?
New York City, no, that's not so. Yeah, they're not as well
Surprise.
staffed as New York. New York State's website and phone numbers are probably one of the best in the country.
That's amazing.
Yeah.
So this business, right? It's multi-state. You're reallocating. What does something like that mean to the bottom line of a business? Like how much money can that?
I mean, it all depends, of course, percent. Like I don't want to talk like specific numbers too much,
Yeah.
but I mean, the more these particular businesses, they're doing quite successful, and it's every year it's benefiting them more and more as they grow.
Yeah.
But no, you're talking. I mean, look, your highest New York City and California brackets are touching 14%, give or take.
On top of federal.
Yeah, besides federal, I'm just talking about because like the highest bracket states around like 10, New York State. The highest bracket cities around 4. So you got 14 together if you're in the city.
On top of your federal taxes.
On top of your federal taxes. And then California as a state goes towards like 12, 13% on its own without city taxes. So yeah, if you can, you're not going to reduce those to zero. I mean, unless you fully, of course, don't do business in those states at all. But
Yeah.
assuming you still are in those states, like these particular guys are, you're still gonna pay in your California, but you're not gonna pay those percentages on all your income,
Yeah.
right? Because you are doing business in other states, so you can allocate it accordingly.
I mean, but a 14%, let's say, a large percentage. I mean, obviously, if they're doing business throughout 50 states, there's a large percentage that's not in California and New York City.
For sure.
So 14% on, getting a 14% bump in your business and your income is a pretty nice bump.
Yeah, again, not a straight 14%,
But let's say 8%.
Exactly.
And then you build it up over years and you save it more. Now, what else, like once you realize that and you look into businesses like this, what are some of the other things that you did with them to help them save even more money on taxes and also save, like what are some other strategies that business owners can do to save that money?
Besides the state stuff.
Yeah, beside the state stuff. Like what are some of the things that you look at?
Yeah, so I guess thinking about them, what they ended up doing is a defined benefit pension plan.
Okay.
So because they're making, maxing out a SEP IRA or a solo 401k is basically right now around 70,000. Goes up a little bit every year or two for inflation, but around 70 grand per business owner.
Gotcha.
So for them, if you take the two of them, that's 140 grand, 70 grand each, 140 grand. By putting them into a defined benefit pension plan, of course, we don't personally do that because we're not financial planners advisors, but we have financial partners we work with. So they actually work with one of our financial partners, and they set it up. So they're putting in well over a couple hundred grand a year in. It's the computation, the calculation is very confusing. It takes a couple months to do. There's actuaries involved, and there's a life insurance component. So I can't speak to the specifics.
Yeah.
I mean, they were like a little wary at first, but like, and going back to my father did a very similar thing in his business years ago in the 80s and 90s in a different apparel business, not the service business, the products, but anyway, he did, and I know my dad told me stories that not only is he so thankful he did it because now he has this stuff that will probably pass down, but also his employees when he actually shut down the business, which of course wasn't a happy thing for the employees. They were one kind of silver lining was that they had these accounts built up for them as well because of the thing that he set up with his accountants and financial advisors back then. So yeah,
can you explain how that works? Like, so how do these benefit plans work?
Again, I mean, I'm not a full expert, but like basically, if your profit is, the 70,000 it's either like 25% of your net self-employed earnings or 70 grand in terms of like SEP IRA, solo 401k. So if you're making more of a profit where you can put more if you profit and you actually have the cash flow to do it. You don't have the cash flow for other things, reinvesting in the business or saving for personal things. If you have that cash sitting there, why not create one of these defined benefit plans to put more in? Yeah. Because it's fully tax deductible.
Gotcha.
Right? It's going to reduce. So not only is it going to reduce your tax burden, but it's also going to grow for the next, depending on how old you are, 10, 20, 30, 40 years and be worth usually a lot more than it is based on the market we've seen in our lifetime,
Yeah, and those, they grow tax-free?
Defined benefit pension plans, because you're getting the deduction now, do not grow tax-free.
Okay.
It's those cash value insurance plans, right? Like variable universal life and like whole, those cash value plans, because you're not getting a deduction now, those grow tax-free.
Gotcha.
And those are for anyone. You don't have to be a business owner. Defined benefit pension plans are for owners.
Yeah.
Self-employed. Cash value life insurance, anyone can do as long as you have that cash to do it.
So the defined pension benefit plan, basically you can put anything over a certain amount. Like, so you fill up your SEP IRA.
Your maximum is you wouldn't do a SEP 401k. You do that instead of it.
Okay, gotcha.
If you've done the SEP 401k in the past, that's cool. But if you're starting a defined benefit plan, then that's what you go with in that going forward, basically.
Gotcha. And explain to me how the employees partake in that.
Well, you can't, depending on how long people have been with you and how much they make, you actually have to include them at some point.
Okay.
So that, again, we can't get into specifics today. It's not really something.
Yeah. No.
That's basically what it ends up. At some point, you have to do the same percentage for yourself as your employees, depending on how, again, a bunch of different factors.
Well, that's nice if you have great employees. And, and you want to keep them. And,
for sure.
And yeah, that's fantastic. And so, long term, why is that so important to have that, like not to have that tax burden? I mean, obviously you keep more money now.
Yeah, I mean, look, it's a cash flow thing, right? I mean, if you're saving up for a down payment or a wedding or some big life event or a kid's college, then you may not want to fully do this. You got to look at really the overall, right? It doesn't only come down to the business too; it comes down to your personal finances, right? But if you have the cash if you're willing to kind of lock up the cash and do it, then why pay those extra taxes now? Why not reduce your tax burden and then build up this nest egg for later? When we all, we all, it's hard to sometimes think about those when those we get to those years where we're not going to get to those years where we're not going to earn anymore. But it's going to happen. I mean, that's life, right?
Yeah.
I don't think time's going to freeze anytime soon. So
no,
and sometimes it feels like it does, but but it feels like the last year has been 10 years sometimes. But,
well,
but that's another story.
And business owners in general don't save money. Like they don't do a good job of.
It's hard to discipline yourself. Yeah, if you're again, especially if you take like a $1 million business owner and a $1 million person on a W-2, that $1 million person on the W-2, as long as they're not blocking their withholdings, is having their taxes taken out every paycheck. Sometimes in case a bonus comes in and you fall behind or whatever, we help people with that too. But generally, you really have to discipline yourself and allocate and plan.
Yeah,
and if you don't, then
pull out for the taxes, but also pull out for retirement.
Right. And also with John at W-2, your 401k contributions are going in. Not only your taxes are being paid automatically, but if you're electing, your 401k is also going in automatically. So everything's kind of done from you through the computer, through the payroll, right?
Yeah.
But when you're self-employed, you really have to discipline yourself and set it up.
What are some of the other ways, like when you look at a business like that, so they save on multi-state, they do a defined pension plan. Now they're saving a ton of money on taxes. What are some of the other things that, a business like that could be doing to save money on taxes or, put money away?
I mean, those are the main things. I think, another thing is really, it sounds basic, but just reviewing your financials on a monthly or quarterly basis, which you'd be surprised how many businesses don't do that.
Yeah.
Whether you pay a human to do the bookkeeping or use AI or use an automatic, have your bookkeeping done, have it reconciled, and review and actually sit down with your CFO, controller, CPA. I mean, it depends. It doesn't always have to be your CPA. It depends how big or small you are, how you like to work. It could be someone in-house, you could be your external CPA, but really review it with them.
Yeah.
And see, like, not only planning for taxes, but decisions, hiring, firing, spending on equipment. Like, especially this time of year when you want to maybe plan for year end, maybe we should, if we were going to buy that stuff anyway, maybe we should buy it in December and not wait till Jan or Feb, because then we can take that expense now and defer those taxes to next year.
Yeah.
So yeah, year end's very important, but even in the middle of the year, middle of the quarter, sometimes you really want to see where you are.
Yeah.
So it's really just keeping up to date, and especially when you have every year or two, you have the tax laws changing and economic environments changing, and now with the rise of all these different investment vehicles and crypto and all this stuff, like you really want to make sure you're diversified and plan and just like set up well. Diversification really is what it comes down to.
What are some of those? When you look at the monthly, like you have business owners looking at the monthly and they start looking at the monthly. I mean, because for a lot of business owners, they don't know what to look at, right? They're just like, oh, there's numbers, right?
Right.
What are some of the things that they should be really paying attention to if they are looking at their bookkeeping monthly?
Well, the first thing, like, look at your margin, your gross margin and your net margin, right?
Yeah.
Are you charging enough for what you're selling? Are you really making enough money? And then, look at the margin, and depending on how that is, I mean, if it's really healthy and it's what you want, then maybe you're done. I don't know, maybe. But if it's not, which usually it isn't the case, you want to look at your line items and see where is the money going. Why is the margin lower than it should be?
Yeah.
Where do you need to make changes? What do you need to implement to really make it a more profitable business?
And so, like with these, what are some of those common things when you look at these like multi-state online businesses? What are the most common things that they're missing by not looking monthly?
The thing that comes to my head first is sales tax, but that's not really a profit and loss thing. That's more of like, are you registered, set up, and actually collecting and running the right sales tax for these different states? Because especially since that Wayfair Supreme Court thing, like, you really don't want to fall behind on that.
So explain the Wayfair Supreme Court thing.
Basically, like, before that Wayfair Supreme Court case, there wasn't really any kind of threshold or regulations from states that you aren't doing business in for you to collect and remit sales tax in. Now, each state sets its own threshold, and states are also being somewhat reasonable. Like, if you're selling $1,000 all year in one state, they're not going to go after you for like 70, 80, 90 bucks. It's not worth it.
Yeah.
But if you hit certain usually most thresholds are at 100,000. So if you're shipping 100,000 within or selling within one state, you want to set up for sales tax there and potentially income tax too.
Wow. Okay. That's very interesting. And that's something you help people with all the time?
Yeah, for sure. I mean, if the actual sales tax administration, sometimes it's better to go with like an Avalara tax charge. There's like 3 other vendors that do it. And it depends on what the situation is. If it's like 1 or 2 states, we can help you. If it's even Shopify now.
Yeah.
Shopify has, because they know they have to, right? There are so many people, they like dominate that market. They need to kind of help people with the sales tax.
Gotcha. So now, these two guys have this online business. Roughly how much percentage-wise you think they're saving a year in taxes?
From allocating
Yeah,
probably like 5 to 7%.
5 to 7%.
Yeah,
And that's
somewhere in that
that's a
range.
nice chunk.
Yeah.
And
But
then
again, they're in New York, California, so it's
and then they're also with the defined pension plan.
Oh yeah.
They're how much usually does someone save on that?
If you're in the highest bracket in New York or California combined, you're well over 50%.
Yeah.
Right, 37. Well, 37 plus 14 is what? It's 51, right?
Yeah.
So you're probably saving 50 cents on. I mean, you're saying about 50 cents on the dollar, or well, it's incremental, right?
Yeah.
So call it average 40 cents on the dollar.
Holy crap!
Right, so 40%, 40 cents of every dollar you put away. So you put a $500,000, you're saving 200 grand. Really rough, easy math.
Wow.
Yeah.
That's
It's real money. Yeah.
That's yeah. And you think if you're investing it, and now how much a double investment can grow.
Right.
You're thinking about that long-term tax on that investment, and it's like it's so much better pay taxes on an investment of 500,000 than an investment of 200,000,
Right, yeah.
and have that. That's a lot of money, and why when you see these types of businesses, and obviously they've got these tax issues and all that, where how does this keep happening? Why do they let that happen? It's just lack of knowledge.
Why do they fall behind?
Not fall behind. No,
properly.
they're not set up properly. They don't understand this.
I think it's just they don't have the right advice.
Yeah.
And sometimes it's not just CPA or tax, also legal, insurance, financial advisors and planners. You need a good team around you. And really communicate with that team. Even sometimes you have the good team, but if you don't communicate, then what's the point?
Yeah.
So it's really, making that somewhat a priority and communicating with them.
Yeah.
Just making sure you have those monthly or quarterly meetings. Again, depending on the level of your business. If you're it's a smaller, maybe side business, maybe once a year is enough. And you just make those quarterly payments, and once a year is enough. But usually, at a minimum, I think you should try to make it a quarter. It's almost like getting your teeth cleaned or something like that.
Yeah.
Like, try to do it at least once every quarter or once every 4 months.
Gotcha. Yeah. So, if someone feels like, hey, I need to have a second opinion, should they get that second opinion?
Yeah, why not? I mean, I've always believed in second opinions on everything.
Yeah.
I mean, like, why not? Even if it costs a little time, money, whatever. Like, I think it's usually worth it.
Yeah.
I mean, whether it's medical or financial or even personal, sometimes you want to get a couple of opinions.
Yeah.
You don't just want to go by one. Especially when it comes to taxes. Yeah, in this country, I mean.
So what's the process of a business owner wants to come and work with you, take a look at they want to say, hey, I need to look at some things. What do you look at with it?
Basically, like the last 2 years of financial statements and tax returns. Really, it's not that not to start. It's not that much. And something year to date, depending on the time of year, some year to date things will be nice to see where they're at if they have anything prepared yet.
Gotcha.
Usually that's it. Just we need to take a look at that. Look at how much they paid and how the financial statements were transformed into the tax returns, how that went, what they paid, are they taking advantage of all these different opportunities? And, honestly, sometimes I'll say, you're in a good place. I mean, if you really want to work with me, like, I'm not going to say no, but, like, I don't see anything wrong here. It happened,
Yeah.
I mean, look, we definitely want new clients and want to grow our firm, but, like, sometimes if with taxes, if it ain't broke, don't fix it. So it happens from time to time. It's like everyone's always in bad shape.
Yeah, but it's always good to get that second opinion. So
oh yeah, I mean, like I said, it can't hurt. If
Yeah.
anything, you'll probably pick up at least one or two things.
Yeah,
So.
yeah. I mean, not everyone can see everything, right?
Right.
So
Exactly.
yeah. Well, awesome. So Neil, if they want to get a hold of you, go to 212tax.com.
Yeah, we're very available on the internet. 212tax.com. We have our YouTube channel, Instagram, Facebook, LinkedIn. We're definitely out there. So just reach out for a consultation, and we're happy to set it up. We're usually pretty quick with that. Even if it's the middle of tax season, we try to make it happen.
Gotcha.
So.
And office in New York, Miami, and obviously Florida, not so much the taxes, but it's a common situation that you have a lot of New Yorkers that are in Miami.
Oh yeah, whether they move down permanently like I did, or whether they spend some time there, also if they want to just talk about the residency thing and the pros and cons of moving, I usually when people have those conversations, they get a little bit of a bonus because I don't always tell them about taxes. I tell them about the schools, the medical, like everything I know that I've been there for 3 years now. I can add a lot of
A New Yorker's
value to
point of
that
view.
conversation. Yeah, for sure. Yeah.
Awesome.
And also, I just mention my personal side thing, my podcast, which is
Yeah.
212 and the 305.
Gotcha.
So filming our 13th episode next week, right?
13th, lucky 13.
Yep.
Who's going to be on?
It's gonna be Brooke Wise, who's a matchmaker from Boca Raton, and she's in New York. She's the New Yorker in Florida now, Brooke Wise. We're gonna get into a little about dating and stuff like that. Never done that before. And then we're mixing it up a little bit. We're having another Brittany Stanfield, who's a real estate broker I met when I used to live in Fort Lauderdale. So we're mixing it up with a couple different topics this time. Two different guests. Yeah.
Awesome. That'll be fun.
Yeah.
We'll put a link to that in the show notes. Well, thanks for being on.
Thank you. Thanks for having me.
And thank you for joining Anil and I on the Taxes Show. It's been I and Garlic, coming from Garlic Studios. If you're behind on your taxes, you're not alone, but it can be scary, and the wrong advice can really cost you. But the right advice can get that out of your hair, and you can move on. What you need to do is find a local certified tax expert, and you can find that at besttaxhelp.org. On this website, you'll be able to find local tax experts near you, compare them, see their rates, and figure out what the best next steps for you before you ever have to talk to anyone and never have to talk to the IRS again. besttaxhelp.org.